Good, good.
Great. So I'm sure everyone here knows about Zuora, but could you describe your company? Because
Sure.
It's always interesting to hear how a CEO describes it.
Yeah. So we're a software as a service company, right? So enterprise software, right? As it stands today, our focus is really how companies transitioning and succeeding what we call the subscription economy. So our big belief is that you and I don't have to buy products anymore. We don't have to buy enterprise software on a CD. We don't have to buy cars. We don't have to buy entertainment on DVDs or CDs. You can simply subscribe to what you want. And we want to help companies transition through that by giving them an entirely new back-end platform that includes billing, payments, commerce, orders, right? Really a modern ERP, if you will, for these type of new companies.
So how did you get the idea? How did Zuora get started?
Well, a lot of people ask, right, especially entrepreneur, like, how do you get your initial idea, right? And I find that the idea always comes from the environment that you were in. Mm-hmm. And so prior to Zuora, I spent about 9 years at Salesforce. And even on day one, right, we realized that we weren't a company. Our business model wasn't one of selling products. It looked like more like a telecom business model, right? We cared about average revenue per user. We cared about churn and so on and so forth. And so we wound up investing, all this energy, because it's always much bigger than you think it is, of building the systems needed to scale this type of business. Mm-hmm. And so fast forward to 2007, the first step was to say, gosh, the whole technology sector is going to go this route, and there's no reason every company should have to build all this stuff because it's big and complex. But the leap for us was to say that this wasn't limited to the technology sector, right? So we started looking around and say, well, how big could this idea be? And we looked at Zipcar because Uber wasn't around. There's no Uber. There's no Lyft. But we could see that all my friends in New York were not buying cars. They were simply subscribing to this service called Zipcar, and we could sort of see that. We could see the start of that transition. And when we look at Netflix, which hadn't done their Quickster, thing at the time, so they were still mailing out DVDs. But you could see more and more people saying, well, look, I can just pay a monthly fee, get access to any movie that I wanted, right? And so we could see that technology was going this way. And so the leap of faith for us was like, we believe that every single company is going to go through that transformation. They're going to wake up and they're going to say, we are a service provider, right? It makes sense. Technology allows us to provide what we do as a service. And they're all going to need to reinvent their systems. And for us, we wanted to see a big idea. If you look at enterprise software, the two biggest companies are still Oracle and SAP, right? Because, from a revenue standpoint, because companies really run their businesses on Oracle. They run their businesses in SAP. But if the world really was going to shift to something new, then the relevancy of Oracle and SAP were going to decline and something else would rise in its place. And we wanted to be the company that invented that.
So you guys came up with that like 10 years ago. Fast forward to 2017. How do you continue on? Are you still like that necessary? Do companies outgrow you? Do you add more products? Like what do you do?
Well, we definitely do all the above, right? So at this conference, Sastra, a few weeks ago, we talked about, what do you have to figure out when you're 30, 40, 50, $60 million, right? And the common theme is you need more avenues for growth, right? The avenues for growth can be international markets, right? New geographies. Oftentimes, you heard that a little bit this morning, you go up market or you go down market, right? And so you can get to $20, $30 million, but once you're starting to talk about how do I get to 100, how do I get to 250, how do I get to $1 billion, right? You need additional things. At Salesforce, when we hit about $500, $600 million, it was okay. We have a sales cloud, right? But now we need a service cloud. Eventually, we'll need a marketing cloud, right? How do we really think about those things? But the other thing that you have to do is since the theme of the conference is 1 to 100, is you have to find a big space, right? And it's not only just finding a big space, you have to find a big space that's growing over time, right? And so when we were at Salesforce, the idea that companies were going to adopt enterprise software on the internet, you can see it, but it wasn't like it was going to happen in the next 12 months, right? Because if it happens in the next 12 months, it's too fast. It's too fast for a startup to kind of catch that, right? But we could see, look, over the next 10, 15, 20, 30 years, everyone's going to shift to the internet. And so we're making a very similar bet, right? That says, so we have customers like General Motors, Caterpillar, right? We have, we're well known for having companies like Box and Zendesk, but these big industrial companies are starting to use us. But General Motors is going to sell a lot of cars, right? I mean, Caterpillar is a $50 billion company, and they believe they can get to $2, $3, $4 billion in subscription services, which is fantastic for us. But for them to get $50 billion of subscription services, this is a 15, 20-year trend, right? And so we have a lot of runway, if you will, to build a company and scale it hopefully to be a multi-billion-dollar company.
You said that the idea was to identify a space that was going to grow. How do you identify that? Because there's also the chance that, you know, if you're providing a certain technology at the beginning, eventually the companies might start doing it themselves, or there's another change. So how do you identify this thing that's not going to go away, that's going to grow?
The idea that companies doing themselves, it's, you know, if it was easier for companies to do it themselves, there would be no enterprise software, right? And so that's always the fallacy, right? Because you know, software, the economics of software, we all know this, right? It's infinitely reproducible, right? And so it's always going to be cheaper, right, for one company to figure out how to do a general purpose thing that everybody uses versus ours. Like in our space specifically, right, the big benefit that we bring is if some companies think about how they want to price or package or do something that the system allows them to do it, right? And because we do this for, you know, hundreds and thousands of companies in all these different industries and all these different pricing models, right, and all these different geographies, right, we've had to build that capability into our system. And it doesn't make any sense for one company to invest that energy, right? So when you tackle our space, right, companies will have to say, gosh, every time I come up with an idea, I've got to work on that myself, right? And but that's, you know, that's why the enterprise software industry actually exists.
So you mentioned companies at, you know, 30, 40, $50 million in revenue. What about 100? When did you guys hit that? What was it like? What did you do right after?
So gosh, you know, we probably hit $100 million, you know, about 18 months ago, something like that, 12, 18 months ago. You know, so ever since we've taken this journey, I kind of reflect on, you know, some of the experiences at Salesforce, some of the experiences here. And so we think of the growth of a company in the ones and threes, right? Because the 10x, 1, 10, 100 is too big. And so you sort of draw a halfway point, which winds up being the threes, right? 1 million, 3 million, 10 million, 30 million. And it gives you and then we talk about, we have a metaphor called the climb, so that we can visualize companies going up this chain, right? So we like the climb because at every given point, it's almost like a switchback, right? Because you don't scale a mountain, right? Like climbing Half Dome, you know, you do these switchbacks. And we like the metaphor for a switchback because it really implies almost an entire about face, right? You've got to change the company. And so you know, we went through, you know, we had a tougher time with our 30 million switchback because we weren't as deliberate about it. So when we were hitting about 80, 90 million dollars of revenue, we said, let's be really, really smart about how we cut through $100 million, right? And let's start rebuilding the company in anticipation of the 100 to 300. And we gave these things names, right? It was a sprint to 100, it was the ascent to 300. And so we, you know, we were very conscious of transforming the company. And so when we did hit $100 million, I mean, we celebrated internally, but it was a bit of a non-event, actually, and because we had already sort of anticipated what we needed to do as the next step.
What was so difficult about the $30 million?
Gosh, so you go through these phases, right? So to simplify it down, I mean, when you're a small company and you're just trying to get product market fit, you're not too worried about, you know, maximizing your price points, right? You know, and so you're just trying to prove it, right? And then you don't really know, so you close a whole bunch of customers, right? And then you learn from the marketplace, okay, the product market, I close 100 customers, you know, at least 40 customers are probably the product market fit. But what do you do with the other 60, right? Or maybe you're lucky, you say these 80 customers were fit, but what do you do with the other 20? And you go through this whole psychology of raising money that's saying, I need every single drop of revenue, right? Because that's how I'm going to do the next round, that's how I'm going to do the next round. And then you wake up saying, okay, now I've got to optimize this, right? You know, these things start to slow you down. These customers are not quite a fit. I mean, what do you do with them? And so this morning, you know, Mark DeWan, our president, spoke, and you sort of heard echoes. And we had to really narrow down our focus. What is our sweet spot? What is really repeatable? The other thing about when you're at $30 million, you don't worry too much about the business model, because if you're losing money, right, you're losing $1 million, $2 million, $3 million, right? When you get to $100 million, these numbers start to get really, really big, right? And so if your business model, right, your income statement, your margin structure is not set up, and then all of a sudden you're like, okay, well now I got to, you know, start managing a company at break even. All of a sudden, if you don't have your business model right, your growth just starts to slow, right? And so there's all these things that it's just premature to think about when you're $30 million. When you're 100, you're saying, gosh, I want to be a public company. I need to appeal to public investors. You know, now you start saying, okay, well, gosh, how am I now going to be a $300 million to $1 billion company, right? And it's just much harder to find that amount of revenue to continue to grow.
So what did you do for the 100 million? Like,
so we came up with, we looked at, so we actually ran a V2MON process, which, you know, for the enterprise software companies, right? This is Salesforce's, you know, there's a lot of Salesforce people, management tool. And I had been voting the V2MON process for a few years. I said, all right, it's time to dust it off and bring it back. And so we had a clear vision of what we wanted, and we devolved it into 40 projects. So there are 40 methods, right, for ex-Salesforce folks in the room. But we put it against 4 pillars. And so the pillars were essentially a sales pillar. How do we get to 100 salespeople? It was a product pillar. How do we shift from a one-product company to a multi-product company? There was a people pillar. You're right?
Yeah.
Yep.
Sorry, guys.
And the people pillar was all about, you know, how do we manage a multi-thousand person workforce, and how do we invest in leadership, communication infrastructures, and so on and so forth. And the fourth one was, we call it operation maturity. It was our administrative function, right? How do we start to act like a public company? And, you know, how do we close our books and audit bill? And, you know, we want to close our books in 5 days and all that kind of stuff. So we, you know, and there was 10 projects in each of these things, and we executed that across the organization. A lot of folks pushed back and said, well, 40 projects, that's a lot to track, right? But we felt like we were at a size and scale. We were about 500 people at the time, where we could put 40 different people on these projects, right? And have a strong sense of ownership. And we felt like we had done the work on our culture needed, because a lot of these things want to, you know, you have a clear leader, but they want to be very cross-functional, right? And we thought we had you know, we really built a cross-functional collaboration, you know, infrastructure for the company, and the culture and the values and all that to make it happen.
So you were early Salesforce, employee number 11. Yes. Tell us about that, the early days, and then also going through the IPO, because I know you guys are headed for that.
Yeah. Yeah.
Some lessons?
Well, you look at Salesforce and people think it's you know, it's this behemoth today, and you know, a little echoes with this morning. It all looks easy, looks happy when you look look back. And there's a strong element of that, right? You know, Ron remembers that. But the early days, I mean, you know, it was a bit of a crapshoot, right? So we started in '99 at Salesforce, and you know, there's no Wi-Fi, right? There's no high-speed bandwidth to the home. And we were literally, just to put it in context, right, there's no Google, right? All our analogies were Yahoo. We wanted to be Yahoo. We wanted to be like the enterprise version of Yahoo, because Yahoo was cool back then, right? It was the portal era. And we actually did all these portal deals, right? You log into Salesforce and click here to buy some golf clubs. We were like, well, we know when the salesperson closes a deal, right, and 45 days later he should have his commission check. And maybe what we'll do is, the way we'll make money is we'll sell golf clubs, right? I mean, it's just, you know, it's just some craziness that was going on back then. And we had like, I did a deal with Zagat, and met Tina and Ned, or whatever their names were, right? Because we're like, we got to push restaurant, right? What do salespeople do? They go out to dinner, and so let's help them find some dinner reservations, right? There's no open table, and so we're just experimenting, right? And it was a .com craziness. We had the B-52s at our launch party, and so there was just a lot of random experimentation. And on top of that, you know, we would go to companies and say, well, you know, you got these expensive salespeople, right? You know, a little older. There's enterprise software back then, right? They were all older. Not like, you know, the whole SDR capability now. And okay, we want them to go in a hotel room at night, unplug the phone, plug it into their compact brick, right? Fire up the 56K modem, pull up a browser just so they can do their sales forecast. And, you know, it didn't go that well, right? So there was just a lot of experimentation back then to get it right. I mean, the interesting thing was you forget it all. And so 7 years later, right, Salesforce is a rocket ship. We start this thing. And I remember one of the things I did was I went to HR and I said, hey, give me a list of the first 150 employees at Salesforce. And it was almost like, you know, like that song you heard, it brings you know, from when you were a teenager, it brings you back to that year. You're like, oh, when True Secrets got hired, we were doing this. I was trying to remember everything we did in the first 2 years, because I just wanted to copy it. I was like, this is going to be easy, right? And it didn't work out that way, right? It was, you know, we're a completely different company, completely different product, completely different time and era. And I say, okay, well, we got to stop doing that. We got to just take out a blank sheet of paper and remember that, you know, every one of these things when you're building a company is hard, and you just got to take it back to bare bones.
Mm-hmm. And so you went through the IPO with Salesforce,
yeah.
right? And so you guys are now headed for an IPO. Do you think that there's a lot of lessons you can take from that, or do you think it was just a different time, different company?
It's definitely a different time.
Tell me more about that.
Our IPO process, so I was chief marketing officer at Salesforce, and this is back in the day where, like, you know, you were 4 letters on NASDAQ, you were 3 letters on New York Stock Exchange, and they were still independent, they were battling each other out. And every tech company was going to go public on the NASDAQ. So we said, look, let's go the other way. Let's go to the New York Stock Exchange. So as a chief marketing officer, they were like, well, you know, you get to use the floor of the exchange for a party. And so we're like, all right, let's go that route. And they threw all this, like, you know, free ads at us and stuff like that. And they're like, well, you get to put the no software sign right on those columns right down on Wall Street. So we're like, okay, this is like a marketing bonanza. So we went public on the New York Stock Exchange, and we do an analyst meeting before we do our first earnings. And, you know, the Reuters, you know, Wei Gu, I still remember, I think she told my LinkedIn, wrote an article as soon as Steve Cakebrett talked to the street that says Salesforce lowers guidance, so the stock goes from like $18 to $9. And it was a rough day. And so we were on lockdown. You know, the company was on like a lockdown for 90 days where, like, nothing going out of the company was allowed to go out the company without Mark's touching it. And so we eventually came out of that, but we had a rough first quarter or two. The other thing is the marketplace totally did not understand what we did, right? So they didn't understand the unit, you know, all this understanding of SaaS unit economics, and none of that was in place. Right, and so the analysts would just say, this thing is a dog. This thing doesn't make any money. It doesn't make any sense. Oracle and SAP are clearly better models. They're just going to come and you know, and just outcompete you. And
Has that improved?
So I think the marketplace really is, the SaaS is the future. Right, mm-hmm. Sometime around 2009, it felt like the marketplace flipped, mm-hmm. and said, you know, instead of like, okay, I'll go on-premise first, and I go cloud if I have no choice. Right, it says, look, cloud first. And you know, if you do an on-premise, it's got to be because you couldn't find a SaaS cloud version, right? And so anything, even NetSuite went public before then, SuccessFactors, all the companies that went public before then just had a lot of headwinds when it came to talking to the street, and we certainly had that. So now, you know, the environment is much more mature. We're the only one, the Salesforce, right? Now there's like tons of SaaS companies. So now it's like, you know, everybody's eyeing each other, everybody's looking at each other's S1s. Right, so it's a slightly different environment now, right? But you know, other than that, right? I think the mindset of having the discipline. I mean, Salesforce was probably only $60-70 million when they went public too, right? But now you try to get a little bit bigger, you try to get a little bit more stable, right? And because you have all this money in the private markets, it allows you to get to that size before you start contemplating that.
So shifting gears, leadership. Apparently 2011 was not a great year for you.
This is the Forbes article?
Yeah. Yeah. Your board sends you to an expert. You got, you know, some soul searching to do as a leader.
Yeah.
Tell us about that.
Yeah, so my PR team says, hey, you're going to get an exclusive or a profile piece on Forbes. Like, all right. You spend a few hours talking to the reporter, and Amy Feldman, and what she writes is, you almost blew it. That was the headline. And so it was a good article. But you know, I mean, you're not really prepared. I mean, Silicon Valley, startups, leadership CEOs, right? There's nothing that really prepares you of how to be a founder CEO, right? I mean, there's no class. Right, and unlike, I don't know, let's say, you know, you want to be Jack Welch at GE, right? And over a 30-year career, you're groomed and you're tested, and you're sent to these different, you know, projects and missions, right? Let's go send you internationally. Let's have you come back, and so you just kind of get thrown into it, right? And then And then, you know, and the amount of change is fairly dramatic, right? You know, there are quarters where, you know, it's life or death, right? You're losing customers, your customers are happy, you're losing employees. And so we hit a pivot point. And again, it was about $30 million, about 200 employees. And, you know, and we had a hard time with our organization. People were saying it was siloed, it wasn't a great culture, right? And, you know, we had some challenges, right, that as a 30-person company, we were easily able to overcome because we're all in a room. But once you get to 150 to 200, right, if the left hand isn't talking to the right hand, right, the need to get a bunch of people in a room to solve some of these problems became prohibitive. And so then as a leader, right, you ask yourself, gosh, what do you do, right? Because again, it's 30 people, you just get everybody in a room and you solve it. 150, 200 people, there's just not enough time in a day and there's just too many people. You know, you can't get 200 people in a room and say, we're all going to go in this direction. And so you have to really reflect on your own leadership style at these successive stages, right? And so something else that I've sort of mentally constructed to help, you know, younger CEOs or CEOs, you know, further earlier in their career in the process is to think about the organization in terms of sizes, right? So you have each person has 7 direct reports. And then think about the implications of tiers of organizations, right? So it's 1, 7, 57, 400. And what happens is organizations, you groove into a management style that's successful at that stage, and then you start breaking beyond that stage, right? And if you can at least have an early signal that says, okay, you guys are about 150, 200 employees now, so you're probably acting like a 3-tiered organization, right, when you were 60 people, and you're beyond that. But you're not quite a 400-person organization yet, right? And so rebuild how you lead, how you manage, how you communicate, given this new layers, right? Because if you think about it, if it's a 3-tiered organization, you can easily reach 2 layers down in your organization and figure out what's going on. But there's 2 layers of management between you and the rank and file. It gets really hard.
You recently said something about being a leader and not a manager. Is that like, how did you come to that?
That was a big self-realization,
yeah.
Right? And said like... Do
you think that's more common than CEOs realize?
I suspect it's pretty common in founder CEOs, right? Because you tend to be vision-oriented. And so there's a leadership framework that we've adopted that I know other CEOs in Silicon Valley have gone through. And it's all based on, there's 46 dimensions to it, but you narrow it down, and there's 3 sources of leadership, if you will, right? You lead by vision, right? Set a direction everybody buys into, right? This is how we're going to change the world, right? Steve Jobs is sort of used as the epitome of that. Do you lead by relationship, right? Everybody's, you know, we're a team and we're going to do it together. Or do you lead by execution, right? You have a clear plan and you just consistently execute the plan, and the founder CEOs tend to be vision-oriented, right? I am high vision, medium execution, low relationship, it turns out, right? And I was talking with Drew, who uses, he used the same system once, and he's Drew Houston, right? High vision, high relationship, low execution, right? So my leadership team underneath me and the way they need to complement me is going to be very different than him, right? He looks for an operationally sensitive, oriented execution person. I'm looking for more, relationship team, culture type of leadership team. And so when I realized that, it's, I'm not really on the day-to-day standpoint of saying, how do I manage you, right? My style is going to be, find somebody, throw them in the deep end of the pool, and if it doesn't work, right, okay, next person, right? So, you try to modulate that. But that's going to be, more my style. I'm more focused on what we need to do as an organization, right, as a company. I'm more focused out there, more focused on customers, I'm more focused on the marketplace, right? And so the type of people that report to me have to be people that don't need a lot of day-to-day hand-holding.
Right. But they need to do that for other people.
They need to do that for other people.
Okay.
That's right.
So we're going to open it up to Q&A. If anyone has questions, raise your hand. Or just shout, I don't know, do a little dance.
Yeah, right here. Hi, thanks for your insight. At what point did you decide to go international, and how did you think about which markets to go into and what to prioritize?
We went international early, and part of that was a comfort level. I did a lot of work internationally at Salesforce, and a lot of my leaders in the organization did it as well. You might have noticed Mark, who's our president, has a bit of an accent, right? So from this morning, and so he grew up in France, and so today, $100 million, over 30% of our sales are coming out of the U.S., right? Maybe even higher. And this is from Europe, Japan, Australia, primarily. I think international. I think the world is organized a little differently. I see it as a U.S. block. An English-speaking block, right? Where if you're a SaaS company, this is why Australian companies are. You're able to start a company in Australia and grow because you can tap into a U.S. market, right, fairly quickly, right? Because the UK, the U.S., it's the language that you deal with the internet, that you interact with, the language you search on, right? If it's English, then you kind of act as a block, right? Because information just flows, right? And so if you're Australian, if you're American, if you're Canadian, if you're UK or British, that is your tier 1 marketplace, and you can go into all those countries, day one. Right, you can also bleed into Israel, some places in Scandinavia, right? They just tend to be smaller markets. And then, the next blocks are Japanese, French, German, Spanish, right? There's a huge block that's Chinese, but that's just a different world, right? That's got its own set of rules, and so you can't just go into it. But these other countries, right? These other blocks, if you will. Right, and so when I look at it that way, we're in English, we're in Japanese, we're in French, we're about to be German, right, and then Spanish, Portuguese, right. We'll work with you if you want to deal with us in English.
Anyone else?
Yeah, I'll do here and there. Yeah.
Hey, quick question. So Dan Levin from Box this morning talked about scaling the management team, and especially seeing when one of your directs can't scale past a certain point. How do you think about that? How have you sort of timed the replacements, or has it been that systematic for you?
So you fight a dual-pronged strategy. The reality is when companies are growing at 30, 40, 80%, right? I mean, Slack went from 80 to 800 people in 18 months. It's really hard. It's really hard for any individual to grow like that, right? Like you just got used to being a manager of 5 people. Well, now you're a manager of managers, right? 6 months later, and so you just got to recognize it's really hard, right? And as a result, you constantly have to bring folks in from the outside of the organization, right? So a lot of folks will want to hire a VP of sales, 30-person company. And you just got to know, you can hire a VP of sales, but chances are you will have to hire his boss in a year, or 2 years, right? And how do you set the expectation? How do you still motivate the person? How do you still help the person understand this is actually really good for your career, right? And then the second thing is how do you give people a set of tools, right? And so we were probably early compared to most companies, but gosh, I mean, I wish I did it even earlier. Right? We have a leadership framework that helps people think through what does it mean to be a second level, third level, fourth level manager, and what are the tool sets that you need to do. And then if you can do both, then people realize, gosh, I've got a big learning curve. And then when you bring a person who's seen that level of scale, they'll usually say, this is a person I can really, really learn from, right? And hopefully they get excited about it. So, yeah.
Do we have one more question, or?
Use your board of directors. When do you go to them versus your management team?
Well, they're so different. Gosh, I mean, the board of directors is not day to day, right? I mean, your management team is in the day-to-day operations, and they own something, right? And you have to hold them accountable for whatever it is they own, right? The board doesn't own anything, right? The board owns, if you boil it down, right? The board owns whether you are fired or not, right? So. I don't really think about that, but that being said, my philosophy is to think about you do have an extended team, right? And a lot of founder CEOs think of their board as their boss, which, neither right or wrong, right? But I'd rather proactively say, well, what do I want them to do, right? And so my first, few board members, right? You're the strategy guy, you're the operations guy, you're the people guy, and I was able to hire different folks with different talents, right? And I go to them for different things. And so you're really good at recruiting, you're really good at recruiting, and so I'm going to put all my exec hires in front of you, right? You're really good at fundraising, so I'm really going to use you for that, right? Tim Haley on my board was an ex-recruiter, right? And so I use him for that. But then once in a while, I'll have my management team check in with him. I'll invite him to one of my management team meetings because he's really good at sensing. Okay, this person seems, he sees things that I don't see, right? Given his skill set, and then I can check in with him and say, well, what did you notice? Right? And he'll say, well, this person seems to be like this person seems like that. You should really check in with this person here. Right? And so proactively find something for your board members to do. Because otherwise, and I've been on a couple boards now, if you have a board member that doesn't have anything to do, then they're going to find something to do, right? And you don't exactly know what that is going to be, right? And so next something's inbound that you didn't know, you didn't expect, and you didn't really need, right? So.
Cool. Looks like we're out of time. Thank you,
Good.
team.
Thanks, Skip.